Oil prices are rebounding after heavy losses on Wednesday amid tight supply and growing prospects of new Western sanctions against Russia. That's despite the fact that signs of progress are emerging from peace talks between Moscow and Kiev. The international benchmark Brent is trading at around $111 a barrel, while WTI stands at $105 a barrel. The focus turned to tight supply after the American Petroleum Institute industry groups reported crude stocks fell by 3 million barrels in the week ended March 25. This constitutes a decline of more than 3 times the expected amount. For more on this now, let's go to Susannah Streeter in Bristol. She's an investment analyst at Hargreaves Lansdown. Susannah, many thanks for being with us this morning. So we've just heard crude stocks fell by much more than expected. Now, at the OPEC Plus meeting tomorrow, which we shall remind includes OPEC, but also allies, including Russia, major oil producers are unlikely to boost output above the agreed 400,000 barrels a day. Do you agree with that? And how worrying would the situation be for the oil market?
Well, yes, it certainly does look as though OPEC Plus countries aren't likely to agree to any increase to the deal already put in place to increase supply to $430,000 barrels a day. And that is because we've heard from Saudi Arabia and the UAE saying the group isn't there for political reasons. It is there to stabilize markets. And that is why it doesn't want to change strategy as a result of what's happened in Ukraine and as a result of fears of tighter supply. However, other watchers would say, well, look, the very fact that we are seeing this tight supply as a result of what's happened in Ukraine isn't playing politics. It's actually responding to what's happening in global markets. Because in addition to what's happening, we do have that American Petroleum Institute report, which highlights that US crude stocks fell by 3 million barrels in the week up to the 25th of March. And that was sharply lower, a decline of 3 times what was expected. And so that's adding to supply concerns, in addition, of course, to the Kazakhstan pipeline outage, which is the country set to lose a fifth of its oil production because of storm damage. And so all of this is adding to concerns about supply tightening right across the market.
Right. Susannah, you're right at pointing at the fact that there are a lot of forces at play here. And last but not least, China. I mean, oil prices are also facing pressure, weakening demand from China because of tightened mobility restrictions, lockdowns in multiple cities. What's the impact this will have on oil markets? Do you think the impact will be minimal in this current environment?
I don't think it's minimal. And that is why I think you're not seeing Brent crude, for example, the oil price rise even further higher, because, of course, we have had this skepticism which has risen about whether or not there really will be steps towards this ceasefire, skepticism coming from the Ukrainian side. And because of this, you might ordinarily have thought that actually the price would have jumped higher than $111 a barrel that it currently is at the moment. But what is keeping it down the price is expectation of lower demand in China because of the Shanghai shutdown. And although authorities are really trying to fine-tune the zero COVID strategy, these are great sways of a major technological and manufacturing hub that have simply been shut down. It's in 2 stages, mass testing going on. But actually, the number of tests have come back higher than it's expected. And it is feared that this situation could be ongoing and that we could see further shutdowns across China. So I think that is what is acting as a drag on the oil price at the moment. It's very difficult to know where we're going from here because, of course, we don't know what will happen with the situation in Ukraine.
Right. Susannah Streeter, many thanks for this analysis.